anyone, with some money can write a check, but what's the actual investment process that goes behind a VC fund?
I think the main thing is pipeline, right? And I think pipeline can come in many, many different ways. I think it can come from cold outreach, where you find companies which you find interesting. Warm intros. I think warm intros are probably my favorite, and I would say most people's favorite, when a fellow investor or a fellow person that you just trust sends you deal flow. And I think that's something that's really, really important. Also, just from your network of investors that you may have co-invested with before, I think that's really, really important. And then more than cold outreach is like going out into the wilderness, going into the conferences, trying to meet as many companies as you possibly can. And I think that's the only way you can really like sharpen your investment knowledge, is kind of seeing the bad companies and seeing the good companies. So taking as many calls as you can, meeting as many companies as you can, and really trying to like build out a thesis as to why you are or why you aren't investing in a company. Yeah. Post that, I would say, after the pipeline, once you've found like a pretty decent deal, it's that DD, and that can take very long or very short, depending on how well they answer the questions. Normally, I would say 2 to 3 rounds of like asking them questions, getting some data, understanding as much as you can. Post that, probably thinking about exits, thinking about financial modeling, and thinking about a way to create a memo which you can then pitch to your IC, right? And I think that's super important.
IC being investment committee.
There we go.